Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Godawari Power and Ispat Limited, hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sana Kapoor from Go India Advisors. Thank you, and over to you, ma'am.
Thank you, Rutuja. Good morning, everybody, and welcome to Godawari Power and Ispat Limited earnings call to discuss the Q3 FY22 results. We have on the call Mr. Abhishek Agarwal, Executive Director, Mr. Siddharth Agarwal, Non-Executive Director, and Mr. Dinesh Gandhi, Director. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Dinesh Gandhi to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Sana. Good morning, ladies and gentlemen, and thank you for joining the earnings call of Godawari Power and Ispat Limited today to discuss Q3 FY22 results. I trust you have had a look at the earnings presentation uploaded on the exchange and the company website. I will briefly discuss the result and then we can, start the Q&A. The company is progressing well on the strategic initiative and continue to strengthen the balance sheet. Deleveraging continues to be top priority at a group level now, and we have utilized surplus cash for achieving the same. While we maintain our zero debt status at standalone business, I'm happy to report that even at consolidated level, we have been able to reduce our debt significantly. Our consolidated debt stands reduced from 3.3 billion as of in Q2 FY22 to 1.2 billion presently. I will discuss some of the key highlights of the results for the quarter. We have been ramping up the production capacity in our iron ore Aridogri mines, and our production was up 28% YOY and 33% quarter on quarter. As you are all aware, we are in the process of setting up beneficiation and additional crushing facilities at the mine. And with these, facilities coming up in the operations in the middle of the next financial year, the mining production shall get further ramped up. And our aim in the medium term is to reach to a target level of 3 million ton, over a period of next 2-3 years time. The pellet production during the quarter was up by 16% and 14% quarter on quarter. Last quarter, we had a shutdown for maintenance in one of the plant, and therefore the volume was lower. The billet production during the quarter was lower slightly on account of shutdown of the old furnaces, which we are in the process of ramping up, by replacing the new furnaces with large capacities. And therefore, some of the furnaces we have taken it for shutdown, which will be up and ready by end of the current quarter. The HB wire production was also lower, but as in strategy, we have reduced the proportion of HB wire sale, low-grade material, as we have started exporting the high-grade wire rod. And therefore, we have reduced the conversion of wire rod into the, HB wire, and therefore, there is a lower sales and production. The iron ore pellet realization has dropped, by about 17% during the quarter. YOY, on basis, it was still up about 20%. This was led by the, fall in the international prices of the iron ore. The sponge iron and TMT, realizations have increased, 42% YOY, and quarterly basis, it was flat. Despite the drop in the pellet realization, we have been able to post higher sales and EBITDA during the quarter, led by higher volume of iron ore and the pellet sales. Our consolidated revenue were up 42% YOY. EBITDA was also up 42% YOY to 492.8 million ton. The consolidated EBITDA was also, led by consolidation of Hira Ferroalloys during the quarter. As last quarter we had, the company got converted into the subsidiary company. The paid for the year was for the quarter was 328 crore at 328 crore, and led by definitely the reduction in finance cost as compared to the last financial year. I'll brief you updates on our solar power projects. As you are all aware and as presented in our investors presentation, we are setting up 3 solar power plants with a capacity of close to about 155 megawatt. Out of that, 70 megawatt capacity at Rajnandgaon, is the construction is going on full swing, and we expect.
Dineshji, I'm sorry to interrupt. Abhishek got disconnected. Can you reconnect him, please? Sorry.
Hello.
Yes, sir.
Yeah. Please reconnect Mr. Abhishek. In the meantime, I'll continue.
He is connected back, sir.
Yeah. Okay.
Yeah, I'm here.
Yeah. Sorry for the interruption, ladies and gentlemen. The solar power plant, as I was discussing, is expected to be commissioned in Q1 FY23, and commissioning of the solar power plant will be, coincided with the commissioning of our increased capacity in steel melting shop, and the power to be generated by the 70 megawatt solar power plant will be used to meet increased power requirement in our billet facilities. We are also setting up an 25 megawatt solar power plant at a different location at Bemetara in Chhattisgarh. The power from this project will be supplied to our captive iron ore mines at Aridongri, where we are in the process of increasing the capacity, setting up the beneficiation facilities and increasing the capacity of the iron ore crushing. And there the power requirement is going up. I would like to mention that the power cost for the mines, as per the current tariff, is over 10 rupee per unit. Vis-a-vis, the power to be produced by power plant will be, closer to about 2 rupees per unit, including interest and depreciation, and therefore this will lead to a substantial cost saving at the mine level with the increase in volume. The another project is 60 megawatt, which is coming up in Hirapur alloys at Bemitara. And the size of this project we had originally envisaged as 70 megawatt, but due to certain technical parameters, we have reduced it to 60 megawatt with the change in the state guideline. And for these 2 projects, land acquisition is in process. We have placed the orders for the module import of module for all these 3 projects, and the modules are expected to be delivered by end of the March. Before the the new import duty regime come into the picture. And all these projects will meet or replace the grid power requirement for the company, and definitely is going to add to the operating margins in the coming years. As regards the company's intent to set up a 2 million ton steel plant, the same is still on the drawing board. We have not been able to finalize on the cost of project on the same, but we have prepared a TOR, and the TOR has been filed with the environmental authorities for environmental approval, and we are simultaneously pursuing the other approvals, including the land. And once the environmental approval is there, and once we have a full clarity on the cost of project and the exact size and the phases in which it is to be set up, we'll update the markets in due course of time. Besides this, the current, as you may all be aware, the current market conditions for the iron ore and in the international market, led by some, assuming that there will be some production recovery in China, and the prices have already increased by about 50% to about $139.40 at the current level. Led by the international prices, the domestic pellet prices, which went down to about 9,500 in the last quarter, have already increased to about 11,500 to 12,000 rupees a ton. And the other product like sponge iron and steel billet prices have also gone up, led by the improvement in the demand in domestic market. With this, I would, we would like to invite the questions if you have any. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kunal Motisha from Reliance Securities. Please go ahead.
Good morning, sir. Congratulations on a good set of numbers. So just wanted to understand our export total and domestic mix of iron ore pellets.
Abhishek?
Yeah, I'll take the question. Good morning. So on the product mix, as we had mentioned earlier as well, we keep changing the product mix depending on the market condition and the demand. So as you're aware, the demand from China was on the weaker side in last quarter. So we have managed to sell more domestically, where we are able to sell our high grade cargoes of pellet to companies like Tata Steel and Jindal Steel, JSPL. So the reason for that is since the coking coal prices have gone up in the national market because of our low amina pellets, so they realize a better value in using our pellets compared to the market, pellets available in the market. So at the moment, domestic is more than the exports, but going forward, depending on China, the charge mix can keep changing. So it all depends on the commercial value of the product.
Okay. So and what about the realization? What is the export realization as compared to domestic?
See, at the moment, as Mr. Gandhi mentioned, the domestic prices are hovering around 11,500 to 12,000 rupees. On the export side, for a high grade cargo, which is 65-1, the realization is close to 13,000 rupees at the moment. So when China come back in the market, let's see how China responds to the new policy of steel making.
Okay, got it. So secondly, my question was on the production front. We're targeting for the coming year for pellet.
See, on the
pellet
pellet side,
in the coming year. Carry on, Abhishek. Carry on.
So on the production side, as we have already revised the EC from 2.1 to 2.4 million last year, and we maintain we will be able to achieve close to 100% capacity.
Sorry, I didn't get you, sir.
Production will be close to 100% as per the EC, which is 2.4 million tons.
Okay. Thank you, sir. Thank you.
Thank you.
Thank you. Participants who wishes to ask a question, please press star and 1. The next question is from the line of Vikas Singh from Phillip Capital. Please go ahead. Mr. Vikas Singh, please go ahead with your question. Your line is unmuted.
Hi, sir.
Hi.
Congratulations on a strong set of numbers despite challenging realizations for 3Q. So I just wanted to understand one thing on the high grade pellet. What I have heard that the prices have gone past $200. So just wanted to understand, are we being able to convert everything into high grade pellet and would be able to sell? Or what is the maximum mix we can sell as a high grade pellet or export high grade pellet?
No, so see at the moment, as you are aware, we are ramping up our mining production. So the high grade production depends entirely on the iron ore coming from a mine. So at the moment, the charge mix is currently producing close to 60% of high grade pellets and 40% of 60 pellets. And as we keep ramping up our mining production, the percentage of high grade production will keep going up. So a lot depends on our iron ore mining production, but at the moment the charge mix is 60% high grade, 40% the normal pellet.
So 60% high grade, which fetches us better realization in the export market. So
it's not necessarily export, as I mentioned a few minutes back. So we are also able to sell a couple of cargoes to Jindal Steel and Tata Steel. So there is a possibility where we might be able to fetch more price commercially compared to the export market as well, if these guys keep continuing to buy. So all depends how China plays and how the coking coal prices are in the near future.
Understood. So my second question pertains to our 2 million ton plant. I know we are still on the drawing board. I just wanted to understand what is our plan in terms of, pace of capex once we have finalized something, because looking at our current cash flows, still it looks a little bit of tall order, because that 2 million ton is kind of a 3x size of what we are currently now. So would it could be in a phased manner of a 500,000 tonnage, or you want to go in a 2 million ton one go, and what kind of technology you would be getting into? Would be again sponge, or you would be looking at blast furnace? If you could give us some details about your thought process.
As regards this project, as I said in my opening remarks as well, the things are on drawing board currently. I can assure you one thing, that the capex will not be, lumpy at one time. If required, we will divide this project into the phased manner. As of now, our focus is on land acquisition and environmental approval and deciding on the technology part. Once we are able to decide on the technology part and the type of product to be manufactured finally, and based on that, we'll update you in due course of time. But beyond that, I'm not able to, say anything on this, because it is still work in progress.
Understood. So just one last question from bookkeeping point of view. So what is our current spot realizations versus the 3Q average right now? If you could tell us.
Pellets are closer to.
We know that for sponge billet, if you could tell us.
Siddharthi, what is the price for sponge billet?
So I'll take that. On the sun side, the current price is in Chhattisgarh around 35,000 rupees, and on the billet side it is close to 48,500 rupees.
Thank you, sir. Thank you. That's all from my side. If I have further question, I'll come back in the queue.
Thank you, Vikas.
Thank you. Participants, you may press star and 1 to ask a question now. The next question is from the line of Shubham Agarwal from Equitas India. Please go ahead.
Thank you for the opportunity, sir, and phenomenal set of results, and congratulations to the entire team. Sir, firstly,
Thank you, Shubham.
Welcome. So, sir, firstly, I wanted to know in general your view regarding the realization and margin. So recently we have, and as you mentioned, we have seen uptake in both realization, but as well as the cost of our raw material, mostly in terms of coal and coke, is increasing. So how do you see, the margins going ahead in future? Q1Q, our EBITDA did drop, but how do you see Q4 and Q1 going forward? If we can have your view.
Abhishek?
I'm taking it. So on the input side, firstly, we don't use coking coal, because currently we are making steel through the DRI route, which is thermal coal based. Yes, we are importing thermal coal, and on the costing side, of course, the market has almost gone up by say 40% since 2022, starting 2022, primarily because of the ban from thermal coal from Indonesia, and there is a shortage of thermal coal in the global market because of Australia going through a COVID phase and the monsoon season, as well as Africa is again down because of their related issues. But we are covered till at least next 4-5 months at a very decently priced. So the margins, I would be say, intact. And looking forward for Q4 and Q1, I think we are sitting at a good place at the moment right now, with the current inventory and the market shooting up. Because sponge prices are up towards all-time high, 35,000 rupees, and the market is still quite bullish on the domestic side.
So more or less the 31% EBITDA margin we can expect to maintain for next quarter.
Hopefully. So it's difficult to, of course, give a comment on the exact number, but with the current trend of the market, we should be able to achieve that if everything goes well.
Fair enough. So secondly, I wanted to know your view on the budget. So few products, I think the import tariff has been reduced, and also in our end product, I think in ferroalloy and ferrous, various other ferrous import tariff have been reduced from almost 15 to 10%. So what is your view? Do we get impacted negatively or positively because of any of this reduction?
No. So yeah, firstly, the tariff has been revised. That has been to support the MSME, so that the input cost goes down, and the domestic prices come at level of what the import prices are. So the tariff revision has mainly happened on the account of imports, is mainly to support the MSME sector. For us, we are not impacted at all because the tariff imports were primarily reduced in certain products which we don't manufacture. We are completely into mild steel, whereas the tariff has been revised in alloys and other categories. So at the moment, we are totally, the impact is technically zero for us. Which is
okay, so none of our raw material gets impacted?
No, nothing. The raw material we import or the finished good we export, the tariff remains the same.
Okay. And in the ferroalloy specifically, I think tariff has been reduced from 15 to 5%. So does this impact our, or do we export ferroalloys from India?
Yes, we do export from Godawari. The volumes are small, as the capacity of ferroalloy is small. But at the moment, I don't see a major impact because the ferroalloy production globally is quite down because of the high energy input, especially in Europe and other Western countries, because of the oil being towards going all-time high and the thermal coal prices also at elevated levels. So the cost of ferroalloy in Europe is quite high. That is why a lot of big players have cut down on the capacity. So which clearly indicates India will continue to benefit when it comes to ferroalloy export.
Perfect. That's it from my side, sir. Thank you.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Parthiv Shah from Tracom Services. Please go ahead.
Thank you so much for taking my question. Firstly, congratulations for a fantastic set of numbers. Sir, my question is regarding the spread of prices that I'm reviewing in Godawari pellet vis-a-vis the pellet realization at Ardent. I recollect there used to be almost a spread of $1,500, and now the spread has decreased. Could you help me understand what's happening here?
No, see, the spread between Chhattisgarh and Raipur will depend purely, depending upon the market conditions in the board market and the timing at which you have booked your orders.
Okay.
Okay, if there is a time lag in booking the orders at one company or other company, then it will impact the pricing. Otherwise, the difference between the pricing, and then third reason is it could be due to the high grade pellet as well. So all in all, there are a number of factors which impact the pricing.
Wonderful. And sir, I appreciate the fact that it's still very nascent in terms of the plans for our new steel plant. But I'm very curious to understand now that in the budget it has been talked about the extension of 15% tax for new manufacturing till March 2024. Do you sense any scope for our company to take advantage of that or be eligible for that? Or because I understand setting up such a huge steel plant takes a lot of time, even from the biggies. So any such plans? Maybe I was understanding that a lot of companies in this sector, they've gone for something like a refurbished plant because a lot of capacities in China because of decarbonization are getting cut, and a lot of such plants are available for sale. So maybe can we expedite our capex? Is my thought process correct? And also, sir, want to understand that there is also this PLI scheme for a lot of various grades of steel. So are we even trying to target that, because taking advantage of both this lower tax rates and the PLI scheme might enhance our ROCE for this project?
Let me take this question. So yeah, on the PLI scheme side, we have appointed ENY as a technical consultant to see where we can actually gain out of the scheme proposed by Government of India. So we are working with ENY on the different products under which fall under PLI scheme. As Dinesh mentioned earlier as well, the things are still on the drawing board. So we still need to, decide which product we need to manufacture going forward. So that is something which we still need to decide, and it might take some time. On the capex side, as you rightly mentioned, although the corporate tax is on the lower side, but it's difficult to comment at the moment whether we can really achieve those targets or not, because things are quite at a nascent stage at the moment.
Fair enough, sir. Valid point. Thank you so much.
Yeah. Thank you.
Thank you. The next question is from the line of Ayush Mittal from Mittal Analytics. Please go ahead.
Good morning, sir. First of all, congratulations to the team for such a fantastic performance. Despite the dip in iron ore prices, it's commendable to see what the company has achieved.
Thank you.
So, sir, coming to this expansion plans that we have undertaken for the iron ore mining, beneficiation, and increase in pellet capacity, can you, sir, share more pointed insights as to by when will these capacities come into production and by when will we see ramp up on a quarterly basis going forward? And how will each of this benefit us in coming times?
Abhishek? Yeah, I'm taking it. See, on the mining side, as you have seen, in Q3, we produced close to, over and above 6 lakh tons. So, we are gradually ramping up our iron ore capacities, going forward. Earlier, the mining capacity was 1.8 million tons. We got a revised EC to 2.35 million tons from one specific mine. Total EC is close to 3 million tons. So, since, iron ore mining, it's a gradual process. So we are hopeful to increase the capacity in the coming quarters, going forward. Secondly, on the beneficiation side, the beneficiation plant which we are installing in the mine, that the project is already underway and it should be in operation by, I think, starting of Q3 of this financial year, which is 22-23.
Q3 of 23.
Yeah, so October, November. Yeah, so October, November of 2022, which is Q3.
Okay. So basically, we can do higher pellet production going forward from this coming quarter?
No, see, we are already running at 100% capacity utilization on the pellet side. Our current EZ is 2.4 million tons. And so the iron ore mining increase will not, directly impact the pellet production. Rather, it will, help us in reducing our input costs, and as well as producing more of high-grade pellets, which will give us better realization.
Okay, got it. Yeah. That's it from my side. Thank you.
Thank you.
Thank you.
Thank you. The next question is from the line of Raj Nahar from Miley Consultancy. Please go ahead.
Yeah, thank you. And congratulations on superb number. My question is basically on the beneficiation plant, though you have answered, but once you complete the beneficiation plant, then entire 2.4 million ton pellet will be of high grade?
No, that will take some time, because for that we need to ramp up our iron ore capacity further. So so with currently 60-40% of the charge mix, I would assume the high grade pellet production will go up to close to 75%, and 25% is remaining the normal grade production.
Okay. Are you still buying lump ore?
No, we don't buy lump ore from the market. I think it's been years since we bought lump ore from the market. We use our own iron ore pellets for our steel making.
Okay. Is it possible to, because now price of iron ore of late has been quite reasonable in your area, including NMDC, they have reduced price substantially. You are not initiating to purchase from them and completely run the pellet plant from your own and use those lumpy ore in your sponge iron plant, so that you can get the benefit of higher pellet sale and can also get the same benefit in steel making by purchasing the iron ore from the market?
See, your point is very valid, but the only reason we don't use the iron ore from NMDC is because our own pellets are quite low in phosphorus. So the steel making which we are doing right now, we are exporting our entire wire rod. So the sulfur phos content which needs to be guaranteed is below 40 levels. By using the NMDC ore, we won't be able to achieve those phosphorus levels in our steel making, so which will impact our supply chain on the steel making side, because we are getting a premium by exporting a wire rod compared to the domestic market. So that is the primary reason we don't use NMDC DRCLO. Plus, it's difficult to source the entire raw material required from NMDC. Our monthly production of DRI is close to 50,000 tons. So for that, we need to source almost 80,000 tons of DRCLO from NMDC. Looking at the current supply from NMDC, we won't be able to source that much, because there are other units in Chhattisgarh which have a long-term agreement in NMDC. So the offtake will be much less compared to what is the requirement. So that is the reason we have given a thought, but eventually we didn't offer this because technically it doesn't suit to our requirement of steel making because of the phosphorus content.
Okay, the last question is about the new solar power. This only the daytime you will be able to get. So in the night you have to get from the grid, or will it be bankable with the grid? What kind of arrangement you have?
See, on the solar, so Chhattisgarh government has come up with a banking policy, whereas as you rightly mentioned, so there will be generation during the daytime, and during the evening time, the generation will be banked and will be drawing power from the grid. So they will be calculating the entire generation basis, the annualized basis, not on daily or monthly basis.
Okay. Okay, sir. All the best. Thank you so much.
Thank you.
Thank you.
Thank you. Participants, to ask a question, please press star and 1. The next question is from the line of Yogan Sheswani from Mittal Analytics. Please go ahead.
Hi, sir. Thanks for the opportunity, and congratulations to the entire team for a great set of numbers and performance. So one follow-up on the capacity expansions that we have lined up. So we are expanding our sponge iron capacity by almost 20%, and similarly we are almost doubling our billet plants, and both are supposed to happen by Q4. So are we on track for the billet expansion, and what's the status of the sponge iron, sir?
On the sponge iron side, we are very hopeful. We should be able to get. So see, we have already got the clearance from CPCB, which is the Central Pollution Control Board. From the State Pollution Board, we are hopeful we should be able to get the clearance probably by end next quarter or early next quarter. Things are in progress. And on the steel making side, we have already taken up the modification in our current steel making, and that project should be completed by Q1 of next financial year, which is April to June. And when that is completed, we should be able to, ramp up our steel capacity.
Okay, all right. So, sir, once the approvals for sponge iron comes in and once the billet plant is up and running by Q1, typically how much time do we think we will take to ramp up this capacity?
See, on the sponge iron side, we don't need any time. It's because we have already done the process improvement. It is a matter of just getting the clearance. On the steel making side, we would need at least 3 to 5 months to stabilize the process and then ramp up capacity. So I'm hopeful by the end of this financial year we should be able to start producing at the desired level.
Okay. So, sir, if I understand it correctly, basically in FY23, the major volume growth can happen from sponge iron for the first half, and then from second half, once our iron ore mines is scaled up and we also have a billet plant up and running, then the second half will the volume growth might come in from the iron ore ramp up and billets, right?
Yes, and also as Mr. Dinesh ji mentioned in starting, there will be an additional advantage with the solar power coming in to operations from Q1 of the next financial year. So that will reduce our input costs drastically. So currently, whatever power we're drawing from the grid at 7.5 rupees, that will be replaced by the solar power. So that also adds to the bottom line.
Absolutely. That's a fantastic. So sir, lastly, if you could just share a number in terms of what kind of volume growth do you expect for the FY23 and FY24? Because realizations is not something which is in anybody's hand, but in terms of volume growth, what is our internal target for both FY23 and 24?
See, we have been...
Sorry. Please take it.
See, we have been producing the, almost to the maximum capacity available, we have been producing across the division. So, without any further expansion in the capacity, except like billet, where we are increasing the capacity from 400,000 to 600,000 tons. The rest of and sponge iron from 500,000 to 600,000 tons. These are the two sections where the capacity ramp up possibilities are there over a period of next 2 years. And once the approvals are received, we'll target the same capacity to be utilized going forward over a period of next 12 months. And rest of the divisions, we are operating the plant at full capacity. And of course, there is a ramp up of the production in the mines is also going up.
So just for clarification, you said steel billets as 6 lakh tons, right? Because presently so 11 lakh.
No, that is the the final capacity. The present aim is to take it to 600,000 tons.
Okay. Yeah. And so do we have scope for more capacity expansion in the current plant beyond this 6 lakh and then sponge?
No.
Then we'll have to depend on the greenfield that we are planning.
There is negligible scope remaining at the existing level. I think we have fully utilized wherever the scope were there through the debottlenecking. I think we are on the verge of completion, and whatever is there, it will get completed by end of this year or maybe by middle of next financial year.
All right, sir. That's really helpful. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Kunal Mutisha from Reliance Securities. Please go ahead.
Hello, sir, again. Just a follow-up question. So for the pellet sales, do we have any contracts in place, or do we just sell on spot basis, or how does it work?
Spot basis.
It's 100% spot basis?
Yeah, 100% spot basis. We we keep on booking in orders for a month and a half. Rest is all on that basis we go. We don't have a long-term contract with any party as of now.
Okay, understood. And so secondly, just wanted to understand from a business perspective, does it make more sense for us to sell more of pellets than selling sponge iron or billets, or our margins? Because I believe obviously a captive mine is the main positive for us. So,
see, there is a value addition at each stage. So it is always better to sell the finished product. At times when we see that the value addition does not make sense, we sell the intermediate product as well. But wherever there is an excess capacity of the intermediate product, we keep on selling that capacity.
Okay.
The production out of that capacity, yeah.
Okay, understood. Okay. But margin-wise, obviously you don't give margins for each this thing, but how would margins, say, probably for sponge iron and billets be as compared to for pellets?
See, this margin keep on fluctuating depending upon the input price, and this is something overall on a steel basis. This keeps fluctuating between 5 to 10,000 rupees on an average, about 7,000 rupees or so. And on pellet side, depending upon the pricing, the margins could be in the range of 4,000, 5,000. And if the prices go down further, then the margin will go down.
Okay.
So that's how it will work. So, finished product, pricing is very important. Raw material for us, there are two major raw material. One is iron ore, where we are almost captive or maybe 90% captive. And in terms of coal, we are open to the market. So whatever coal prices are there in the market, it will impact us, thermal coal.
Okay, understood. Okay, thank you.
Yeah, thank you.
Thank you. The next question is from the line of Mishta Mukherjee from Steel Mint. Please go ahead.
Thank you so much for taking my question, and congratulations on the good set of numbers. Sir, on the wire rod front, I wanted some update from you. Like if you had mentioned that we have started exporting high-grade wire rod, and certainly we have lowered the production of HP wire. So any update if you could share on the export volumes and any target that we have set for this fiscal and next fiscal?
Yeah, good afternoon. So, I would like to be a little funny. I think Steel Wind covers, quite a bit of Godavari Power, and I've just read an article yesterday itself where Godavari Power did, export more than 1 lakh tons of wire rod in the last financial year. So, as you are aware, we are almost out of the commercial market of wire rod. We are producing export quality wire rod, SAE 1008, SAE 1010, and different grades, as stated by BIS and Indian standards. So our focus will be to continue exports of wire rods because we get a better realization. Plus, the domestic market is so volatile, so we always prefer to operate at a minimum inventory levels. So, and we always have a healthy book of export orders. So that is where we're going to keep operating going forward as well.
All right, sir. Thank you so much.
Thank you.
Thank you. Before we take the next question, a reminder to the participants to ask a question, please press star and 1. The next question is from the line of DB Chalang from KLG Securities. Please go ahead.
Yeah, good afternoon. Thank you for taking my question. Congrats to the management for providing excellent result.
Thank you, Alanji.
The question is, I understand that are we allowed to sell the iron ore? If yes, are we selling or not?
I think with the recent policy changes, we are allowed to sell the iron ore, not to the 100%, I think 25% of that, of our production, but we are not selling it because, we need the iron ore for our captive requirement and we are not selling it.
But the realization...
higher valuation, we will get higher highly by converting it into pellet and finished steel rather than selling the iron ore.
Okay. And secondly, that pellet sale, is it difficult to sell or it is a hot cake item, we can sell it immediately?
So pellet is a better product as compared to the virgin iron ore, and it is well accepted. Even China, when they cut down the steel production, or when they shift on the pellet rather than going on the iron ore. And whenever there are high prices, they go on iron ore. It's not that they are not producing the using only pellet, but pellet is a better product and it finds demand, and we are able to sell it without any difficulty, be it in domestic or international markets. Pricing will of course depend on the prevailing market conditions.
Okay, sir. And how is the China demand, sir, presently and in future?
Abhishek, would you like to comment on that?
Yes. See, at the moment, as everybody is aware, China, the iron ore market globally is up by almost 30%, 25-30% in the last 4 weeks. And everybody is quite bullish. China will continue to, start producing steel at the desired level, which it was last year before they announced the production cut to maintain the emission levels, because once the Beijing Olympics is over. So, at the moment, the sentiments are positive, and I feel the market should be on the upward trend.
Okay. But presently, they are not buying from us.
No, they are buying. They are definitely buying from us, definitely. Rather, a lot of players from India have again started exporting to China from January onwards because the prices of domestic and export have almost come to parity. So, going forward, there is a demand, and of course, China will keep driving the prices.
Okay, sir. Okay, sir. Thank you very much, sir. So nice.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1. The next question is from the line of Vignesh Iyer, an individual investor. Please go ahead.
Congratulations, sir, on a good set of numbers.
Thank you.
I would like to ask you that since FY21, for the in case of iron ore pellets, right, it was basically more related to export since China was producing a lot of steel, right? So what I can go through this production summary is for for this 9 months ended, we have produced more iron ore pellets, okay, in GPIL as well as ASL, right? And even if you compare last quarter to this quarter, there has been an increase in production, whereas the sales is not equivalent to that, or quite close to it. So we have got a decent amount of inventory left with us. So can we assume that the domestic market is there to consume all this iron ore pellets that we have produced?
No, see, there is some accumulation of inventory in the ardent steel in the last quarter, and even it continues to be so because of the logistics issue and availability of rake. And most of the rakes are diverted for coal import and coal transportation, and therefore there is a lesser availability of the rakes for exporting or shipment of the pellet, and most of the parties are preferring the transport of iron ore through the rakes, and therefore there is some amount of accumulation. It will get cleared the moment transport situation is. Wherever there is a shortage at the end consumer level, then they change their order to road network rather than preferring on the rail, but depending upon the demand, supply, and logistics facilities available, there is some accumulation, but we believe that this will get eased over a period of time.
Okay. So basically this increase, as in if I noted down iron ore pellet GPIL, 14% increase in QOQ
product. Is a slightly larger, there is a major problem about the logistics, and therefore the inventory. You would have seen ardent steel, the sales is lower than the production.
Right.
Yeah. I don't think, Abhishek, do we have any this kind of logistics issue in GPIL? I don't think so.
No, we don't have any logistics issue in GPIL. Odisha is kind of challenging in terms of logistics because there's so much of volume. So if even 10% go here in Vienna, so there is a challenge. But in case of Chhattisgarh, at the moment we don't face any kind of issues.
Oh, okay.
And if you do face, we always come out with a solution. We have been able to come out with a solution till now. Yeah.
Oh, okay. Right. Yeah. Thank you, sir.
Thank you.
Thank you. Participants who wishes to ask a question may press star and 1. The next question is from the line of Anshuman Mohata, an individual investor. Please go ahead.
Yeah, hi sir. Congratulations for a good set of numbers. I just wanted to have a color over what will be the long-term iron ore prices going ahead when everything gets normalized. Where do we see the iron ore prices settling? It went to 230, then it came to 80, then again 140. So
it is very difficult to predict where will be the iron ore prices when everything gets settled. When does it get settled? So frankly, it is beyond predicting where the prices will be.
We should touch 300.
$70 to $230. So this is a middle of the level. What it prevailed earlier, what it went up to, and where the current market is. So it's very difficult. And who can presume that the prices can go up 100% in a year and can fall down 90% or say 70% from the top?
No, that's correct. I'm just asking that we must be having some averages for the year, 1 year, 2 year ahead. This it can prevail.
No, sir. It is. Hardly anybody can predict to the level the kind of market dynamics are there. So sorry, I'm not able to answer your question exactly.
No, you have any idea? I'll answer in one word and one line that nobody knows what's happened in China. Even Chinese people don't know. So speculating is not the right way to go about it. We just need to enjoy the ride, whether it's going up and down. Because even China doesn't know what policy they're going to come up with next 1 week, right? And with commodity markets, especially iron ore, because they're the biggest importer of iron ore in the world, China drives the iron ore market. There's no denying about it. So China wants to produce more steel. Iron ore will go up like last year. If they want to produce steel, then iron ore probably would stabilize to a certain level. So it's difficult to speculate. And it's not right also to speculate.
Correct. Okay. Thank you.
Thank you. The next question is from the line of Mithun Shah, an individual investor. Please go ahead.
No. Computer also.
Mr. Mithun Shah, please go ahead with the question. Your line is unmuted.
Yeah. Hello, sir. I just wanted to ask a question regarding Godavari Green. You have taken a shutdown and you are going for a total ramp-up of the plant. Can you throw some more light on that?
See, Godavari Energy, we had taken a shutdown, which was periodical shutdown after, 7 or 8 years of completion. And that shutdown was for the, maintenance of the turbine. And that was a, preventive maintenance is for the operating module of the OEM. That has been completed and it is resumed operation.
Okay, so it was nothing
nothing. It is a routine maintenance work, and that too. Yes. It was a after a gap of 8 years.
Okay, sir. And sir, one more thing, it still is being mentioned as the non-core asset in your presentation. So I assume when the capex for the 1.5 to 2 million ton steel plant is about to take off or something like that, would you be thinking of having it off at that time, or will it continue to be 100% on? Is there a change in thought or any view on that line, sir?
No, there is no major change in thought. If there is the right opportunity at right time, I think we want to do it. It's not that, and therefore we are showing it as a non-core asset.
Okay, sir. And sir, one more thing regarding the dividend distribution policy. You had mentioned around 10 to 15% of the net profit would be distributed in form of dividend or buyback. So we are almost 9 months, 3 quarters in the year. So can we expect it on dividend side, or are you thinking of any buyback?
First quarter we declared an interim dividend.
Yes, first quarter you did.
Whatever policy which has been laid down by the board will definitely honor it. So at the right time.
Okay. Thank you so much and all the best.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Marcel, an individual investor. Please go ahead.
Yeah, first of all, definitely a big set of congratulations for the healthy result. At the same time, I also want to congratulate the CFO and all the allied team for presenting such a beautiful and detailed presentation.
Thank you.
I think one thing has been missed out from the presentation, which is regarding the coal cost. Since our company is in the steel production and the coal is a major cost, especially the hike in the coal prices we saw in the last 6 months. So can you please take this opportunity
I take your advice, sir. I think we have been disclosing the iron ore prices through a chart. I think we are not disclosing the coal input cost. We take a note of this and we'll start publishing it from the next quarter onwards.
That's very good. No, that's very good thing. But I want to ask something. That is currently, for example, in within 1 year, for example, how much metric ton of coal we are consuming? Do we have this linkage with the Coal India or any of its subsidiary, or are we importing the coal from outside, or do we have a captive mine? So can you please reply to these questions?
See, we don't have any captive mine. We keep on participating in the mine auction. As and when we are able to get at a reasonable price, we'll definitely go for it. As regards the consumption, I think we consume about 900,000 to 1 million ton coal in our sponge iron power plant as well as in our pelletization facilities through coal gasification. And part of that, the coal for DRI is imported. Rest is domestic coal. Partially procured from the Coal India through the linkages and partially in the auction.
So it means we are.
And we use only thermal coal. We don't use coking coal.
So anyway, because coal price was very much high, so definitely it means we are exposed to the vagaries of the coal, the fluctuation in the coal prices.
Yeah, not to the 100% because I think Abhishek, we would be importing about 500 to 600,000 tons of coal.
So for the sponge iron we are importing about close to 0.5 million tons annually. And for the gasification, which is being used in the pellet and for the power plant, we have linkages from Coal India. So that part is already covered because the Coal India notified price is quite relatively low compared to the open market. Of course, for the sponge iron, we are exposed to the national market. So as in where the prices, if they go up, we have to absorb the cost. We have no option.
Yeah, one last question. So means what was the prevailing price of coal in the Q3, imported coal, and what is the current prices?
See, the Q3 pricing, are you aware?
I'm aware. So for Q3, the average price was close to, around 12,000 a ton ex plant, for my sponge iron consumption, which is delivered to my plant. Q4, the cost will be on the higher side because the market has gone up quite drastically in last 4 weeks, which was never expected because of the ban from Indonesia, which was announced on 1st of January. So the cost of Q4 in coal will be slightly higher compared to Q3.
Sorry, sir, I missed your statement. Can you please kindly repeat that average coal price in Q3 and the present price approximately nowadays?
The present price I won't be able to disclose because we buy on thermal coal, on index basis. So the index is something which is always discovered another month. So for example, January the thermal coal index was 172. February the index is already crossed 180. So for Q4 the prices will be difficult to comment at the moment. For Q3 prices were around 12,000 rupees a ton.
12,000 rupees or dollar? What do you say?
No, I'm talking about 12,000 Indian rupees delivered to my plant.
12,000 landed cost.
Yeah.
And currently the cost is higher or lesser, at least that idea.
Yeah, so for the same quality, currently the cost is higher. Cost is definitely higher compared to Q3.
Okay. And how soon we can have the transcript of this conference call uploaded in your website and the stock exchange, this announcement?
Sorry, come again?
How soon we can have the transcript of this conference call uploaded in your website and as well as informed to the stock exchange?
I think Dinesh would be the right person to answer this.
See, coal chart will start amending it from inserting it in the presentation from next quarter onwards.
That is fine. Like you have already decently answered this question. I take you sometimes asking transcript of this conference call. Because I think
the transcript of the conference call.
Sorry?
He's saying the transcript of this conference call. He wants the transcript of the conference call.
I think we'll get in next 2-3 days and it will get uploaded.
Okay, sir. Thank you. That's all from my side. Thank you, sir.
Thank you.
I will take the last question now. It's 12:30. Yeah.
Ladies and gentlemen, this will be the last question, which is from the line of Shashi, an individual investor. Please go ahead.
Yeah. Thank you for the good numbers posted, and my question is, what is the total power usage at the consolidation level, in megawatts? Can you repeat? And what is right now the captive generation, and what is expected captive generation going forward? And what is, if after considering this expected generation, if there is any shortage or excess power, and also what is the power cost to sales ratio?
So I think if I got it correctly, you have got two questions. What is the current power mix? How much we are generating presently, and how much it will be after the solar project is set up. Am I correct?
Yes. And in megawatt?
In megawatt. Our current installed capacity is 73 megawatt, and we are generating close to about 50 crore unit annually at our existing plant. These two plants, 95 megawatt in GPIL, will operate at about 17-18% kind of PLF. So 18 megawatt this additional power will come towards the next financial year in a phased manner. Initially 70 megawatt will come in Q1 and 25 megawatt will come in by Q3, around that level. So additional 18 megawatt plus 73 megawatt will be the kind of 70 plus additional 25 megawatt we are buying it from Jagdamba Power. So 73 plus 25, it is close to about 98 megawatt plus actual generation of closer to 18 megawatt from the solar.
Okay. So what is
besides this, in Hira, our subsidiary Hira Peroleum, we have a 28 megawatt of power generating capacity, 20 megawatt coal base, and 8 megawatt biomass, and 1.5 megawatt windmill. So 29.5 megawatt So 9.5 megawatt is a grid power which we sell it to the grid, and 20 megawatt is captive in Hira Ferroalloys plant. 60 megawatt additional solar power plant is coming up in Hira Ferroalloys, and that will be also fully for captive to replace the power which we are buying from the grid currently. Hello.
Okay. Yeah. What is the total power cost to sales ratio in terms of the...
See, our current cost, for coal-based power is close to about 4 rupee to 4 rupees 25 paisa, blended from all sections, waste heat recovery, coal-based, import from Jagdamba, import from grid, etc. And going forward, the cost will reduce as the solar power will come at a substantially lower cost.
Okay. All right.
Thank you. Ladies and gentlemen, as this was the last question for today, I would now like to hand the conference over to Mr. Dinesh Gandhi for closing comments.
Thank you, ladies and gentlemen, for attending to the conference call of Godawari Power and Ispat Limited. We have tried to address all the questions with the If anything is left out or if anybody has any question, we are welcome to contact us on the offline, and we'll be happy to answer your question. Thank you very much. Thank you all.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you. Thank you very much.